Right now, AI stocks are acting like a casino that accidentally discovered cocaine. Every single earnings call, AI. Every startup pitch deck, AI. Every company that used to sell boring software suddenly claims they're building AI infrastructure for the future of human civilization. And Wall Street is eating it up like it's free pizza at 2 a.m. But here's the weird part. Some of these companies are absolutely changing the world. And some of them are probably the pets.com of this generation. That's the problem. Nobody knows which is which. And when nobody knows, markets get dangerous. Because what we're watching right now feels less like a normal bull market and more like a sequel. A sequel to the dot-com bubble. A sequel to the Nifty 50 craze. A sequel to literally every moment in history where investors convinced themselves that valuation no longer mattered. And historically, that usually ends with somebody crying in a parking lot. Back in the late 1960s and early 1970s, Wall Street fell in love with a group of companies called the Nifty 50. These were the can't-lose stocks, companies like IBM, Coca-Cola, and Polaroid. The logic sounded genius. These companies are so dominant, you can buy them at any price. Sound familiar? Today, it's not Polaroid. It's AI. It's NVIDIA. It's Microsoft. It's Palantir Technologies. It's every company with the letters AI somewhere in the investor presentation. And to be fair, the technology is real. That's what makes bubbles so dangerous. The internet was real. Railroads were real. Electricity was real. But investors lost fortunes anyway because they paid insane prices. That's the key lesson people forget. A revolutionary technology does not automatically mean revolutionary stock returns. Sometimes the future is real, but the stock price got there 5 years early. During the dot-com bubble, the NASDAQ exploded nearly 400% in 5 years. Then it crashed almost 78%. Amazon survived, the internet survived, but tons of investors got absolutely vaporized.
Now let's talk about the numbers, because this is where things start getting weird. The Magnificent Seven tech stocks now make up roughly 35% of the S&P 500. That's insane concentration. 7 companies basically dragging the entire market around like a truck pulling shopping carts. And AI is the engine behind almost all of it. NVIDIA alone added trillions in market value in an absurdly short period. At one point, the company was worth more than the entire stock markets of countries like Canada or Germany. That's not normal. That's everyone at the party took tequila shots simultaneously behavior. Now here's where the bulls make their case. NVIDIA's revenue growth has been absolutely monstrous. We're talking quarterly revenue growth above 200% year over year during peak AI demand. That's not hype. That's real money. Big tech companies are spending hundreds of billions building AI infrastructure. Why? Because nobody wants to be the next blockbuster watching Netflix happen in real time. But here's the villain in the story: capital expenditure. The AI arms race is becoming insanely expensive. Meta platforms, Amazon, Alphabet, and Microsoft are collectively spending well over $250 billion annually on AI infrastructure and data centers. That's GDP of a small country money. And investors are assuming this spending will eventually generate massive profits. But what if it doesn't? That's the question nobody wants to ask. Because right now, the market is pricing AI like it's guaranteed to become the most profitable technology revolution in human history.
So what does this actually mean for normal people watching this circus unfold? First, AI is probably not a fad. That's important. This isn't Beanie Babies. This isn't JPEG monkey NFTs. AI is already reshaping software, advertising, search, coding, logistics, medicine, basically everything. The productivity gains could be enormous, but stock markets are emotional creatures. In the short term, they swing between AI will destroy civilization and AI will make us all trillionaires, usually within the same week. Right now, the market feels addicted to one narrative. And anytime markets become dependent on one narrative, risk goes up dramatically. Because if growth slows even slightly, or if companies overspend, or if regulation hits, or if consumers simply don't adopt AI products fast enough, these stocks can fall hard, even if the long-term story remains true. That's the part most people don't understand. A stock can be an amazing company and still be a terrible investment at the wrong price. Just ask investors who bought Cisco in 2000. The company survived. The stock took over 15 years to recover.
So, what the fuck is going on with AI stocks? Simple. We're watching humanity do what humanity always does. A real technological revolution appears. Money floods in. Greed takes over. Valuations stretch into the stratosphere, and everyone starts believing normal rules no longer apply. Maybe AI changes the world. Honestly, it probably will. But history says the road from revolutionary technology to great investment is rarely smooth. Some companies will dominate. Some will disappear. Some investors will become legends. Others will become exit liquidity. And that's why the smartest move right now isn't blind optimism or blind fear. It's discipline, risk management, independent thinking. Because in markets, surviving the hype is usually more important than chasing it. Trees don't grow to the sky, but every generation believes theirs will.